Hey guys, my name is Lacey and welcome back to my YouTube channel. Today I want to go over 3 different ways you can prepare for a stock market crash or correction in 2021. Now before I get started, I just want to ask if you guys can like this video and subscribe. This is a very new channel, so I can use all the support that I can get, but without further ado, let's get into it. The first step is to have money reserves. You should have 3 to 6 months of your income in physical cash or in a bank where it's easily accessible. This is important for life in general and for investors. Usually when a stock market crash or correction occurs, it's because the economy is at a weaker point. If this is the case, you shouldn't panic sell out of all of your investments or be forced to do so because you need the cash for emergencies. To capitalize on this crash, you should dollar cost average in your positions and even start new positions in companies where it might have been too expensive to do so prior to the crash. If you don't know what dollar cost averaging is, it's a strategy that investors use to reduce the risk of volatility by spreading out the purchase of a stock in intervals so they're not buying it all at once at a high price. If you've done your research and you know the company is solid, but are just experiencing the negative effects of a bad economy, there should be no reason for you to sell out of that company. If you do so, you risk seeing the stock rebound or even reaching new heights and missing out on all the money you could have made. The second step is to have a diversified portfolio. If the stock market is bear, it is important to not have all your eggs in one basket because one sector might be hit harder than the other. And if you have all your money in one stock and it crashes, you are more than likely to lose all the money that you've made from that stock. If you're a beginner in the stock market, you should have 2 to 3 stocks at the most. Also, to make sure that your portfolio is diversified, you should have stocks in as many sectors as you can. Some of the sectors include information technology, healthcare, financials, energy, and consumer services. You can also invest in exchange-traded funds or ETFs or real estate investment trusts or REITs, which are less volatile. The third step is to not panic and know your risk tolerance. The stock market is bound to crash or have a correction every once in a while. If it only went up, everyone would be an investor and they would all be millionaires. The sooner you realize that the market fluctuates and your ability to keep your emotions in control will keep you from making irrational decisions that might cost you a lot of money. If you're new to the stock market, I would assess your risk tolerance. Are you young or are you old? Are you going to need this money in a couple of years, or are you saving it for retirement? How fast do you want to grow this money? All of these questions need to be answered so that you know which type of portfolio you need to have. So those are the 3 steps you need to prepare for a stock market crash or correction. Let me know in the comments below if this video was helpful for any of you guys, and I'll see you in the next one.